all gets out of control, massive bubble. Could we skip a cycle? That's possible. Could we fall 75%, rally, don't go the new high? We've seen NASDAQ skip a cycle. We'd have to see a full-blown bubble cycle. My guess, that's the next cycle. I think that's the whole everything AI, ridiculous, everybody knows the game, bubble cycle.
What happens if Bitcoin suddenly soared to $1 million per coin and the entire cryptocurrency market skyrockets wildly almost overnight? What happens to traditional financial assets like stocks and bonds as investors scramble to get a share of the crypto craze? What about the banking industry, which will undoubtedly be faced with widespread bank runs and severe collapses? This is one of the likely scenarios Real Vision founder and CEO Raoul discusses in his recent interview with the New Era Finance podcast. While Powell does not see such a massive bubble cycle occurring in 2025, he strongly believes the next crypto cycle will be a full bubble cycle with other disruptive innovations like artificial intelligence and robotics adding to the fire and completely changing the dynamics of the global economy. This scenario ties nicely with Powell's economic singularity or exponential age thesis, a comprehensive framework that outlines how technological advancements are accelerating at an unprecedented pace, fundamentally transforming economies, industries, and societies. According to Powell, this era is characterized by exponential growth, driven by innovations in technology, finance, and demographics, leading to massive opportunities for wealth creation and investment. The hallmark of exponential growth is that it starts slowly, but then accelerates rapidly, often surpassing expectations. Powell often refers to Moore's Law, the doubling of computing power every 2 years, as a historical example of this phenomenon. For example, Powell estimates that the cryptocurrency industry will grow to record highs of 12 to 15 trillion by 2025. However, he estimates a bigger explosion within the next 5 years, after that to around 50 to 100 trillion, when the exponential age is fully in effect. When that happens, Powell envisions Bitcoin conveniently hitting $1 million per coin and a drastic and dazzling change to the global economy.
So that is the global liquidity, right? And that's, or we use Fed net liquidity is another one. Either way, or financial conditions, even better. Financial conditions that we use are basically rates, the dollar plus oil. Those are the kind of three variables that really matter for the global economy. Oil has been falling, so that's dampened the issue somewhat, but the dollar screamed higher, as did rates. Now that has a lag on the economy. So we're talking about it having a lag on crypto. We probably see a slower economy in Q1 or Q2 than people are expecting, which plays into the idea that you've got is, I think the market is underpricing cuts now by the Fed, and they kind of go through this madness every time this happens. They're like, well, it's one and done, or well, it's just a little bit, they're never going to do it, and then eventually they have to, because they've got to roll $10 trillion of debt, as does every other country in the world. And financial conditions are far too tight for the Chinese. If the Chinese don't get their economy going, we have no export market. We've got no bar of treasuries. You know, Europe is struggling as well. Germany's in a total mess. So we need to ease financial conditions, and they all know it. And they've had to hold on as long as possible because inflation had been higher in the previous cycle, and it cost everybody the election. Every government across Europe, pretty much around the world, that was in over COVID got voted out. Why? Because prices went up so much on people. So they're very nervous about that. But we've now got a new regime. So I think you're right. I think the probability is the economy's weaker than expected, and that gives them the green light that they've been after forever. This is very similar to the 2016-17 cycle. Rates went up once in 2016 and then stopped. Didn't go up again. In fact, the Fed didn't even put any liquidity in, but the Chinese had to because the dollar had been too strong prior, so they really had to stimulate. And then the Europeans and the UK then had Brexit, and they started stimulating. So the US didn't need to be doing it. Same in 14 and 15. I mean, rates didn't move. There was a bit of QE that came out of Europe, obviously from the banking thing, the draggy everything it takes. But then after that, crypto, the amount of movement in crypto doesn't need a massively large total amount of liquidity. People just over-focus on the Fed, over-focus on balance sheets, just as long as global liquidity keeps rising by 8%, crypto will still do 100% a year. It's kind of, so I worry less about it. I think, again, people have an anchoring bias on the last cycle, but having seen 3 of them, the last one was the outlier, and crypto went up less and finished earlier. So therefore, that kind of doesn't make sense if it's just the liquidity cycle. I think a lower volatility cycle in terms of the economy actually creates more risk-taking than a higher volatile cycle like COVID.
We might have the final easy cycle and then perhaps have a copycat of 1929-ish, where all of a sudden the debt bubble bursts.
What they learned in 2008 was a very simple trick. Debase the currency and the asset optically goes up. That was the whole Draghi thing. That was everything. So we cannot do that because we know the mechanism, the US, that is. Can it happen in individual countries, whatever? Yes, but not the US because it has the reserve currency and has the fiat currency. So the 1929 scenario cannot happen. It simply can't happen. We've taken that left tail out. However, let's say, okay, Bitcoin goes to 1 million this cycle. It's a stupid cycle. It all gets out of control. Massive bubble. Could we skip a cycle? That's possible. Could we fall 75%, rally, don't go the new high? We've seen NASDAQ skip a cycle. We'd have to see a full-blown bubble cycle. My guess, that's the next cycle. I think that's the whole everything, AI, ridiculous, everybody knows the game, bubble cycle.
Powell has long insisted that calls for a Great Depression-style event, especially in the United States, are unrealistic and completely misleading. Not only is the U.S. a global superpower and the issuer of the world's reserve currency, but the Fed, like other central banks, has been steadily using various quantitative easing measures to avoid such a scenario since at least 2008, according to Powell. 2008 was supposed to be another 1929 moment. But for the timely intervention of the then Fed chair, Ben Bernanke, who had an understanding of what went wrong during the Great Depression and how using the Fed's balance sheet to deflate the value of money can save the system, that's exactly what the Fed and every other central bank did. However, their solution was only temporary. What they did optically increased asset prices and saved the system. But that policy became irreversible forever. The first round of printing and every other round after that led us to this very moment when it has become impossible for the system to self-regulate and survive on its own, without central banks printing more money to prop it up. So all money printing exercises now are just an effort to add another band-aid to the massively wounded system, which ironically further worsens the situation. Yet central banks cannot stop slapping on band-aids, at least until a more permanent solution is found. Powell is convinced that this solution is the coming exponential age, which he warns will completely change the world in 6 years. Here are more clips from his interview.
Because of what I term the economic singularity.
Yeah.
So how economies work, once you understand this, you understand why we're in the mess we are, what's going on, everything, is GDP growth, trend rate, is driven by demographics growth, so i.e. population growth, productivity growth, plus debt growth. So if we think about Europe, where you are, we have aging populations. We try to import labor, but in every country in Europe, they're like, whoa, this is too much because we've got this old population and the society pushes back against too much immigration in one go. So we're kind of stuck at this thing, right? And as you get older, you become less productive. So these rapidly aging populations, just look at GDP and look at the trend rate of GDP and look at the age of the population. Japan the slowest, Italy, country by country by country. It's that. And the US is better because they've got a younger population. Okay, what I then found is the labour force participation rate, i.e. the number of people in the workforce, as a percentage of the total population, that keeps falling over time because people are retiring. But when you invert debt to GDP, it's the same chart. So debt growth has just been a function of demographics, trying to support an economy of aging people, and that's every country in the world. Same thing. Okay, so we're in that trap right now, and we've got all this debt that we built up that we're just rolling, and we're increasing the debt just to pay the interest. That's the game. It's not from government borrowings in excess. They're not doing huge infrastructure spend. It's just servicing debts that keeps raising the debts. So that's creating this liquidity and debasement of currency. It's the servicing of the debt. because they don't want it to go bust. You can't let the collateral go bust because the system's too levered. Everything goes to shit. It's a down 90% of everything and it's the end of the world. So they're not going to let that happen. So we're in this cycle until something changes. So you hear Scott Bessent, the new Treasury Secretary of the United States, saying, we've got one chance, and that's to try and grow our way out. Okay, fine, because GDP growth is the economic activity that pays the interest. Don't forget, the private sector's 120% of debt to GDP as well. So it's kind of totally screwed up. But the question is can you sustain it with an old population? It seems provably not. Can you shift it a bit? Maybe. But in 10 years' time, something like that, 5 or 6 years' time, we've got a new thing to compete with, which is the rise of AI. And AI is basically human knowledge, but at an infinite scale. We can create endless. We're already seeing how fast, these very early crappy agents on Twitter are, but they're going in their thousands, like meme coin proliferation. So we're going to create unbelievable amounts of AI, which is human knowledge, and the applications that make it easy for us to use. So then we don't need knowledge workers, doctors, lawyers, radiologists, whatever it may be. And then the robots. Amazon now employs more robots than humans, and that's only going to keep accelerating. So that means we're going to get infinite humans or replacement humans, which means if you think of the formula, if population growth goes infinite, what the fuck happens to GDP? It goes through the roof. But who does it accrue to? The agents, the AI companies? Who? But it's not the individual.
Raoul Pal contends that the global equity market cannot be allowed to collapse, and central banks will intervene at any sign of significant trouble. To prevent such an outcome, he has consistently expressed skepticism about predictions of a widespread financial collapse, even in the face of aggressive interest rate hikes and widespread fears of a severe recession, while acknowledging the systemic flaws in the current economic model. Powell remains confident that central banks will rely on money printing to stabilize the situation until a long-term solution is found. Powell sees artificial intelligence and robotics as pivotal in resolving global demographic and productivity challenges, but believes their full potential will not be realized until 2030 in the interim. He advises focusing on crypto and tech stocks asset classes that have consistently outperformed the Federal Reserve's balance sheet. Powell's view is that these investments offer the best opportunities for growth in the current environment, while the financial system navigates through its challenges. Do you share Powell's optimism that the system can endure without a catastrophic collapse? Don't forget to like and subscribe, and let's keep this bull run going.